Alrighty, what's going on, D-Gens? We're back after a crazy weekend in crypto. I took the weekend off, went to Savannah with my grandparents. A wonderful time. It's a beautiful city. And yeah, I was greeted with a couple of wonderful tweets from Elon Musk while I was up there that it's not the whole reason the market tanked, and we'll get into it. But I guess let's jump right into it. So, if you follow Bitcoin, you'll know that this past weekend has been kind of a bloodbath. Kind of a big fight between all the Bitcoin maxis, as they're called, and I guess the rest of the meme coiners. Musk has constantly showed support for cryptocurrencies like Doge, and it's really kind of sat the wrong way with some people in the Bitcoin community. My thoughts on meme coins. I have a little bit of Doge and Robinhood. I don't hold any others. I have some Musky and some other things that I was testing out some liquidity pools with, but I mean, honestly, I've been thinking about it because it was kind of upsetting seeing all these coins pump because I know they don't have much value. But I'm realizing that there might be a space for them in the crypto market. They're bringing a lot of new people into the market. I mean, in 2017, I got alerted into the market by the ICO boom, and I lost all my money, chasing after altcoins. And now, 3 or 4 years later, sticking with it, I finally learned. And I think the same thing is going to happen here. I think all these people that are buying these meme coins and investing in these currencies thinking they're going to make a lot of money, they might make it, and that's awesome. They're going to make money, and hopefully they buy coins that are worth it. But I think it's a good onboarding, a good way to onboard people into this space. And I think that there is a place for those coins. I think Bitcoin is expensive and can be scary to new people, and I think that these cheaper coins offer an easier entry, something that they can wrap their heads around. And I think that it reduces clutter on the Bitcoin chain. There might be a reason to have everything on one chain, but I think that it might be good to have a currency like Bitcoin that's the blue chip, and then have these cheaper coins that most people have, and that's where a lot of the day-to-day transactions take place. So I mean, we'll see. I mean, I don't know if Doge is going to be the winner, or Shiba, or SafeMoon, or any of these other coins. Like, I really don't know. And I'm not going to sit here and tell you to buy any of them. I really don't think you should buy any of them. But if that's what you want to do, then go ahead and do it. But let's look at the Bitcoin chart real quick. I don't know how to tell short-term price. But to me, if you look at this, these are daily candles. From about this year, this looks like a pretty good entry. For anybody that's dollar cost averaging, anybody who's in it for the long term. I mean, to me, this looks like a bottom. This is not to say that we couldn't jump down into this area. I think it's quite possible to go into the 30s. I'm going to be getting a little nervous as we go further. Because I have a loan out. I took a loan out on the 1st of May up here around 58, and I'll be liquidated at 18. So if we drop below 30, I'm going to be getting a little scared. Have to pay that loan off, add more collateral. But with Bitcoin coming down like this, I mean, you can see over here DeFi and all of our DeFi projects are pumping. I think alt season is finally starting to show itself and come out, and I think that those meme coins was the catalyst in this crash. I don't think it was all Elon Musk. I think another reason, something people weren't talking about, was the tax due date. It was this last weekend, and I think people sold Bitcoin to pay those tax bills. This Bitcoin was up at the moment. So I mean, if we look over here, SNX 20%, Aave 13%, almost 14%, Chainlink up 15%. All the DeFi projects are doing very well. And then we've got Bitcoin down 3% and Doge down 3%. So it looks like the market stabilized and gotten back to what it should be at. This isn't to say that we couldn't see more bleeding, but in my opinion, you know, that's crypto. You know, you gotta be prepared to wake up to negative 15s, negative 20s. I mean, right now we're about 30% down from the top on Bitcoin, which is pretty normal. I think in the last bull run in 2017, I think there was about 30% or about 30% correction. So down 30% on Bitcoin, that's normal, nothing to be scared about. If we dip below 40, okay, let's start trying to figure out what's going on, maybe, you know. But right now, I mean, I just helped my grandma buy the dip and set up her Celsius account. So sorry, grandma, if it goes down. I'm sorry. I didn't mean to lose you any money. You didn't lose money unless you sell. You'll make more. You'll earn interest. But yeah, I wanted to talk about meme coins, bringing new people into the space. The OGs are upset. I actually made a outline today for the video. You're welcome. Bitcoin will recover and DeFi will boom, which is what we're seeing. You know, I mean, I'm in Link, I'm in Uniswap, SNX, GRT, FI. I'm in all of these coins, and I really like seeing all these green. And especially going green against Bitcoin. These charts aren't the USD value, but the value that these coins have against Bitcoin. And I like to see the altcoins that I hold gain value against Bitcoin, not just in terms of USD, because I prefer Satoshis over dollars. So yeah, that was all of the charting and price talk that I wanted to do. I wanted to go through and look at all of the farms I have running right now. So let's go over to Uniswap V2 first and check these out. Man, it seems to be going up and down. Fees have been kind of stagnant. So we've got a total of 396 there, and this is about 2 weeks in. Maybe about 3 weeks. Okay, yeah, about 3 weeks in some of these pairs. So yeah, I mean, if you watch some of my previous videos, I've came to the conclusion that liquidity providing at small numbers like this really isn't worth it. And like, these were all experiments. I really wanted to like figure out how these work, and I tried to do the research online and figure it out, but I couldn't understand it until I actually put my money in here and then started messing around with it and watching as the price changed, how these values change and how I'm affected by impermanent loss. It's hard for me to learn something abstractly. I kind of have to get my hands dirty with it. So I mean, I like these positions. I'm probably never gonna sell these because I'll just lose money on gas fees. But it is paying out. I mean, for $4 on that, what is that, about 1% over 3 weeks in fees? There's impermanent loss on that, so it's really not 1%. But you know, if you had a sizable amount of money and you're doing this, you could make some good money in fees if you're proactive. Let's go over and check V3. I have a small position over here with a very wide capital range. So I've been learning more about Uniswap V3 and how their liquidity pools work. And it's all about capital efficiency over here. So these price ranges, so my position will only be traded on and collect fees when the price of this pool is within these two things. Okay, so my position is spread out along this price curve between these two ranges right here. And what I was reading online is there's actually fee multipliers up to like 4,000%, where if the liquidity you're providing is close to the trading value. So right now the current price is 97.64. So if I had a minimum price of 97 and a maximum price of 98, my position in that pool would be very close to where the liquidity is moving back and forth in that pool. So my liquidity would be the one that's getting traded the most, hence I would be earning more fees. I've sent some resources in the Discord. talking about this, and I've also used some other software to kind of track my liquidity pool positions. And if you want to learn more about that, link in the description, join the Discord. We've got a growing community over there. We've got some miners, we got people interested in a bunch of different projects. So if you want to join the conversation and talk about these things or ask questions, hit the link in the description below. While you're down there, hit the subscribe button and the dislike button. Now that that's out of the way, let's get back into it. Let's go over to Bancor and see how this is paying out. Bancor is cool because there's no impermanent loss over here. But I did pay a lot of money in gas fees to get this set up. So, what was that Uniswap? That was like 16 cents. Uniswap V3, 16 cents. Okay, so Bancor, I've earned almost 1/4 of a BNT token so far. It's pretty cool. And 12 cents in total fees. So that's what, $1.77 so far over here, and this is in permanent loss. So I only staked my my Bancor tokens and my ETH. I mean, I lost the ETH and the gas fees. I lost a pretty large sum of ETH and the gas fees to get this done. I mean, that's part of it. I wish I would have done more. I mean, that's what I'm learning is being a lender in DeFi right now is hard with small amounts of money. If you've got small amounts of money, I recommend using Celsius. Again, my referral link will be in the description below. If you deposit $400 worth of Bitcoin, you'll get $40. You can help me out and help yourself and get paid every Monday. It's a really awesome platform. I really like it. So Bancor, that one's done. Let's go check on Unfederal Reserve. Let's check our single-sided staking. So I've staked some 5 Chainlink over here and about 200 of the Unfederal Reserve tokens. This token's really taken a nosedive in the last couple weeks. I think it's found a bottom around 40%, but if you watched any of the previous videos, I mean, we were buying this token from 120 to 150, setting up these farms. So that's crypto though. So over here we've got $1.60 in rewards. Then there's also like 6 cents there and 15 cents there. So small amounts. I don't plan on pulling these out anytime soon. So this is really just an experiment. I'm trying to figure out how these things work. And to me, I gotta get my hands dirty and play with them to figure it out. So we've got $1.64 there, plus let's call it another 20 cents. Okay, let's check our double-sided staking position. Thanks. Connect the wallet here. This one has been doing very well. So at 42 cents a token, it's 496.918 times 0.42, $208. So this one, I did the math on it a couple days ago in the Discord. It's printing about $15 a day in these tokens. Now, a lot of that money is illiquid because it's not $15 going into my bank account or my wallet. It's in there and I have to take it out. And if we can see right here, if I were to harvest these, I guess gas is down a little bit right now. What is the fee here? 120. So, I mean, that's lower than it has been in the past, but I mean, this is $200 worth of tokens, and then it's going to take me $80 to get it out. So it's going to really cut into my earnings if I do that. So I'm waiting and sitting on this position until the token price goes up, and this is actually worth something to pull out. But this is the most profitable farm we've got going on right now. And if you want to know, I do have all of the transactions reconciled. I was going to make a blog post about it, but it's not written up yet. But if you want access to those transactions and my thought, like I have more notes along with it as well, join the Discord below. I'll be happy to share that with you. I love being transparent with you guys. Like, I don't want to feel like I'm teaching you or like telling you to buy something and then you think I'm gonna dump on you. Like, I'm just trying to figure this stuff out and learn, and I love being transparent. So let's check the last source of income here. I've got this Eth Miner running on my computer. So estimated earnings now about $3 a day. I just got a payout this last weekend from it, my first payout on there. I'm just running this on my PC. I mean, it's mining right now. It mines all day, and I use my computer just fine. Gets a little warm in my room. I just run the fan, and it's all right. But this has come down a little bit. Last week when the trading volumes were up and ETH was going crazy, all those meme coins, the miners were really cashing out because there was the gas fees got all the way up to over like 300 gwei, and they're down a substantial amount now. So miners are making less. Profitability has gone down. This was making about $5 a day at one point, but I'm doing this to kind of cover my gas fees and whatnot. So we've got about another 15 in there, ready to be paid out. So let's get on to it. What should we be focusing on now? And I think that like DeFi is what's going to shine over these next couple of weeks, especially with ETH 2.0 coming out in the next 2 months. It's really going to be interesting to see how that launch goes and how it works for the community. Like, I really want to see ETH succeed. So DeFi, data and infrastructure, Chainlink. I mean, if we look right here, Chainlink's up 15% today. You know, SNX, another for synthetic assets in DeFi. Aave is a lending protocol, borrowing and lending protocol. I mean, DeFi is bouncing back, and I mean, this is to be expected when Bitcoin slows down and goes sideways. I think this could be the start of our altcoin summer, alt season. So some news with Chainlink. On the 28th of this month, Arbitrum is supposed to be released. Now, Arbitrum is not a token or a coin, but it's a scaling solution that will be deployed on Chainlink nodes to provide scalable off-chain computation and on-chain dispute and resolution mechanisms. Now, Parker, what is that nonsense that you just spit out? Well, I'm no expert, and I read this article and get a little bit of a better idea of it. I'll link this article below, as well as this blog from Vitalik about Rollups. Essentially, what we're talking about here is a scaling solution for Ethereum and DeFi, and how the computation takes place and how you verify that computation. So right now, the way ETH works is proof of work, meaning that every single node in the network has to verify every single transaction. And that's why it's so expensive to get anything done. So what Arbitrum plans to do, and what their solution accomplishes, is providing these secure and reliable off-chain computation nodes, and this allows the gas fees to be reduced because you're not doing the computation on chain, but essentially you're doing the computation off chain. You're backing it with your money or your stake. You're staking against it, and then you're publishing the root hash or the state root of all those transactions that you compute. So you're not actually pushing all of those transactions to the main chain, but you push the root hash, which is part of the data structure, or just one little identifying piece of data on chain. And then there's called an arbitration period, where the other nodes can verify if that was true. So they can download your transaction history and then see if those transactions match that root hash. And if that state root or that root hash matches, then it gets published on chain. So I'm still learning more about this, and I think you should read these articles in the description below. This is a really easy one to understand. Vitalik's is a little more in-depth and complicated, but this is a really good one to start with. Just to get a couple more points out, to kind of wrap that up. I know I may sound like gibberish, and I'm not the best at explaining this, but it's very important for going forward in this space is scaling up and creating the ability to have more transactions. If Ethereum wants to compete with Visa and MasterCard as a settlement layer, it has to be able to settle more transactions per second. And solutions like Arbitrum and the off-chain computation provided by Chainlink are going to be those solutions that make that possible. I mean, over the past few days, layer 2 solution Polygon, which does parachains or side chains, I mean, their token price is up 100%. So people are looking at these L2 solutions. Loopring is another one. LRC, that's a layer 2 exchange. I haven't really experimented with it a whole lot. I have a couple of LRC tokens, just a few, maybe like $20 worth. But yeah, to get back to this point, let's so decentralized networks of Chainlink nodes can validate the smart contracts. They can receive external data inputs, compute the contract with associated correctness guarantees, and push those contract outputs and proofs on-chain, and send the results to on-chain contracts when the arbitration is done. And it's just kind of me quoting this right here. And essentially, that's what Arbitrum and Chainlink do together. Is Chainlink kind of provides this infrastructure for Arbitrum to run on, and it's exciting. If this kind of technology works, I mean, it's going to be very bullish for Chainlink, and it's going to be very good for the DeFi space. If we can bring gas fees down and bring more people into here, I mean, I was talking to a buddy the other day about, you know, DeFi and the problems we're having, and he's complaining about the fees, and I told him, I was like, I mean, there's no Robinhood of crypto. Robinhood changed the trading game with 0 fees, and there is yet to be that type of a solution in crypto right now. It's very hard for retail traders and individuals that don't have a lot of money to do this kind of stuff. And that's why I think solutions like Arbitrum, these other L2 scaling solutions, are going to be very good for the ecosystem and the industry as a whole going forward. So I'm very excited to see what this does in the coming weeks, and how it grows the entire industry, not just Chainlink. I'm very excited to see the Chainlink price go up, honestly, and I know it will. But you got to stay vigilant. You got to stay doing our research. So if you want to learn more, you want to have conversations, join the Discord below. Hit the subscribe button, hit the dislike button, check out some of these resources and articles I'll link down there. Do some more reading about this. I'll try to make some more videos in the future, but I mean, I'm no expert. I'm here just to kind of figure this out. I want to give a voice to all the people out there that are, you know, too scared to talk about this, or don't think they know it, or don't want to pay that money to that, you know, person trying to sell you some course. I'm not going to sell you nothing. I don't want to sell you anything. The only thing I'm going to shill you is Celsius. Use my Celsius referral link in the description. Get yourself $40 worth of Bitcoin and put $40 in my pocket so I can get some coffee and I can continue making these videos. With that being said, I'll see you later.